works too. Okay, so
I hope
how's
you have
everyone doing?
I hope you have an adequate helmet for the debate or fight. Good morning.
Good morning, K-Man. So, you know,
I put the link, by the way, for the Trader Summit event on the chat box. Good morning.
Okay, good morning. So here we go again, guys. I was looking at USD NOK. There's nothing bearish about it. Looks like a bull flag that's going to come out of here. I don't need this. Then the dollar, expressing itself again to the downside. This isn't surprising me because, I thought we were going to make new lows. Gold's closer than silver to doing so, and I think both will. Maybe into next week. Your thoughts, guys, on yen continuing to, do this one-way trip? I even saw USD yen bear has been bearish for a while, who flipped his count to where, eventually you can see a 180 yen. What do you think?
Why not 200?
Anyway, an astronomical number to the upside after already an astronomical run that we've had.
I thought it was astronomical when it got to 120.
Yeah, I know. It's the first time though, Ryan came in that, it's not ideal, it's over 70, but for the longest time, you didn't have any divergence. They more or less look more like the daily, the RSI, never getting back under 70 on the 4-hour. Okay, so it's diverging, but over 70, that's not a high probability short, but if I wanted to rationalize one, I could probably go the 2-hour, or I can't even rationalize it on a 15-minute. So nothing's going to stop it. And are we going to new lows in euro, new highs in the dollar? And this was just a little, ABC here, and we're going to blow to new highs now. Accommodate people that were looking for, like Jim Welsh, looking for one more high in the dollar. It couldn't close. 112 was important to me, and it just, it closed underneath it, but this doesn't look impulsive at all.
I think there's going to be an important lesson here for traders in how you trade these big levels. I mean, the world and his mate are watching 150 in dollar yen, and you've got to know how levels like that react. Okay, trading 135s, 145s, that's one thing. Trading things like this when there's so many eyeballs on it, you've got to know how it reacts. If it breaks on a first or second attempt, it's going to run through quite wide. This isn't going to be a 15, 20 pip flush. I know Kay and some of the other guys have got techs up around the 150, 30s, 40s. That's the sort of area we may get a run to. It may even run further because a lot of people are going to be front running that level. So naturally, there's all going to be big stops parked behind it. So if you're looking to trade it and you want to trade it for more than just a scalp, you've got to go small on your size and maybe a bit wider on the stops.
Anything on the option side, Ryan, that might give you some kind of market tell?
Yes,
what might happen here?
We've got some things going on at 150, which subscribers will know about on the platform. Okay. This is the stuff we get that we hear about that can have a big impact.
Send me a private message. I'm a subscriber.
Yeah, we'll do, mate.
Send me it. Call me on the walkie-talkie.
On the tin cans.
Right. Okay, so there is some options coming into play, and around big strikes, the ideal is for it to settle right at the strike, so they collect premium on both the call and put side. Right?
Yeah, they'll be playing both sides of it. The hedges will mess around with it.
Yeah, try and peg it at that strike. You guys agree with me? Could we have a new low in euro and a higher low in cable?
Well, I think about the higher low in cable than the 103, yes.
Yes.
But I've got some really quite big level around the 109s, low 109s.
Okay.
I think if the dollar rushes higher, it's a possibility that we get down there. For the dollar yen, it's as I've been saying already. I don't know if I said it yesterday on Face as well, but at least I said it a couple of times on the Flow Show. Is that the yen is not only wrestling the dollar at the end. The dollar yields, the dollar tens are the main driver. The yields are the main driver, but then it's also wrestling with all the other central banks, barring People's Bank of China, raising rates, and so it's got to fight on several fronts, and that's what's keeping the dollar yen then as the main instrument just bid.
Right. Right.
I don't know.
Rate pressure.
Top of the 150, I expect a bit of a fight around there. I don't know
Okay.
the size of those or what kind of options. It always depends on what kind it is. There may be some Japanese corporates involved, in which case there should be stops right above. But it all depends what kind of options they are. Yeah, for the euro and the sterling, I think we've seen a couple of days where both crosses, the euro crosses and the sterling crosses, went up because of the interest rate expectations going up. But that seems to, from this morning, seems to have faded a bit, and now people are looking at the dollar again.
Yeah, it's interesting because I mean we're talking about a possibility that hasn't happened in a long time, right? I mean, usually up until recently the pound was a weakness, right, and was leading everything to new lows. But it's interesting that we're thinking euro could make a new low without cable. And perhaps maybe even the commodity currencies.
Yeah, look at dollar China and this.
The yuan.
Yeah, the dollar yuan is absolutely flying, trading 727 right now. And it's always I'm keeping an eye on the CNH compared to what they fix in the CNY, and we are like 2%, 2.25% above, which
Isn't that a weird spread?
Sorry.
I mean, unusually high spread.
Yeah, well, every time we run up to like 2.25%, 2.5% of CNH above where the CNY fixing was, it looks to be a little bit of a level. So I'm a bit cautious to. I won't chase it up here.
Wow.
But of course, everybody's trading 730, worried about Chinese GDP being delayed, being bad. So the speculators are having a bit of a ball here.
Okay. Yeah.
Just to throw something in, Dale, quickly. I've had a quick look at the options, dollar yen out to the end of the year. The biggest strike we've got is 150. There's just over 9.2 billion between now and the end of the year. That's not an awful lot. Just under 9 billion of those are calls.
Okay. All right.
And above there's not a lot until 155.
Okay. And so, ideally the people who take the other side of the trade want to see it, that strike not be violated because, normally it's John Q. Public buying both puts and calls and the institutions writing them. Correct?
Yeah.
So, their ideal scenario is to have a cap there so they don't have to go out and buy the cash to cover it, right?
The fact they're all calls suggests that there's hedging for a break, and what can happen when we break these big levels and there's not a lot of option action above is that you get all the gammas, deltas, all those guys, they have to chase the market, and then that itself can push the price up even further.
Okay. A little bit of risk off today, gentlemen. With strong dollar, all one market, we've talked about this, right? And I have some confluence here. Everyone's saying, well, this is just 3 waves and we should abort. And I think there could be another wave here. So I think, down here I like the confluence. Wrong on close, it's back under 3,600, something like that. So
I
actually
think.
think that,
Hey,
go ahead,
hey,
go
hey,
ahead.
Dale.
And
Sorry, I
you
was just
were
gonna
relentlessly right, Stel, about
relentlessly right.
about yields.
Well, this is what's driving everything, I think, and this has been the case for months now, actually for years, right? Yields have been driving everything. We had over a decade of zero rates, QE, risk is basically free. So everything was shooting higher. Now that this is all reversed and it keeps going, it's inevitable that we're going to see a reversal in equities. And the problem that bulls have now in equities is that we have broken now above in 10-year yields, and we're at 410 now. So the previous high has been taken out. And it looks like we have one more push higher. I personally think it's a final one. I think it's going to be a terminal because there's going to be a combination of the Fed starting to backtrack, basically starting to pivot because equities are going to have one more leg lower. I've said this for a while, for weeks and weeks, that I think 3,300 and the S&P is the place where the Fed starts to turn dovish, and we are 15% away from there, and I think the combination is going to be that. There's also, I think we're also going to start seeing inflation drop. Simply, I've said this before, simply the way it's calculated year on year. Once we get to February,
comparisons.
Once we get to February, it's going to drop. Theoretically, it's going to drop by on its own, unless there's another massive event or something. Obviously anything can happen, but theoretically, all else being unchanged, this has to drop on its own. So it doesn't mean that it's good, because we will have baked in basically a 8 to 9% inflation, and if we go back to 0%, then the Fed's gonna probably say, yeah, we did it, it's perfect. No, everything's so much more expensive than it used to be. You really have to have negative inflation for things to be back to normal, but you're not going to have that, obviously. But anyway, I think yields are still driving everything. I think we have one more push higher, 450 in the 10-year. Yeah, maybe even higher. But I think that's going to coincide with stocks having another pretty decent leg lower. Yes.
Yeah.
And then I think it's game over. I think.
Whoa.
Here we go.
Good morning, good afternoon, everybody.
Hey, Blake.
Dude, you guys sound like a bunch of doom and gloomers. I mean,
well, here's
like
one
seriously,
that's
like
not,
go pull your panties back up and stop being such like bunch of sissies.
You want to get ahead. You want to get in front of this move.
Did you know we rallied 7%, 8% off the lows? Here we are down we're down like 1.5%, and you guys act like it's like the end of the world. What
Blake.
Seriously, like what is wrong with you people? Oh my God. I'm going to sit here and pull my hair out. I mean, look, we had a false breakdown the other day. We rallied like literally 7 or 8%. And we're coming off just a little bit, and you guys act like we're gonna holy shit.
Excuse me, I've got to step in here. You won't catch me and still pulling our hair out.
No, but seriously, no. I good morning, guys. I do want to point this out though. You're talking about this is the final leg in the move in yields, and I think the yields this is what we have to be looking at. But what I think a lot of people are not paying attention to is how close we are to the 161% extension of the summer move. So if you look at the lows here in June to the highs in August, the 161% extension is basically where we're at. That's like been our target, with ForexAnalytix, right here, and we're almost there. So if you look at the market and you go, okay, well, here we get that, final surge higher in yields, lower in the 10-year. We're like, we might touch that today, and you might see that yield move just a little bit higher and allow the dollar yen to, maybe punch above that 150, as you were saying, Ryan, probably like the 150.50 or something. Because it's going to overshoot, and it's going to overshoot big if it does. It's not like going to overshoot by a couple of pips, as you pointed out, because these are such big levels and we're so extended. Volatility is just increased significantly in yield products like the dollar yen. I mean, I think that we're really close. And if we are, you guys that are targeting, 2,000 in the S&P are going to be wrong, Stelios. Wrong.
You want to step ahead, step in front of this train? Please do so. I'm not doing it. No point trying to be a hero. I've said this for a while, but I think we're closer to the final turn than many people think. But I still think we have one more leg.
You know, one of the things that I find really interesting about like these moves too, you know, take a look at like the commodity currencies are finally starting to find. You know, they're really starting to find, I think, a base. I want to point out that the Aussie dollar, I think, is building this like, you know, people are speculating whether it's a, you know, inverted head and shoulder pattern, or I think it's just going to be more of a basing pattern that we're building. In like the Aussie, you can see the Kiwi starting to hold in there, you know, after creating a false breakdown. There's a lot of things that are developing, which I think are going unnoticed. But now the one thing that you guys did talk about earlier, we you know, I posted actually a chart in the chat room earlier this morning, is you do have the dollar CNH just poking its head up above these highs, and you guys were just talking about that, and I think that is a bit of a, you know, that's a little bit of a risk off, you know, indication. But one of the other things is, you know, I know the VIX is up today, but is it really up? I mean, you know, Dale, you've been around where the VIX pops its head, you know, up pretty aggressively.
It's going to 26.
Yeah, when I look at volatility, you know, trading below 40 right now, I'm not really too scared. I mean, maybe it will, you know, maybe we will finally break out above 40, and then I'll go, holy crap, you know, here comes the you know, the wrath of Khan. But right now, I don't know. I'm not. Did I just make a Star Trek reference?
Yeah.
I did.
Yeah, wrath of Khan.
And I'm not even a Trekkie. I'm a Star Wars guy.
Hey, Blake, you know? I know you don't like us to get political in here, but I have a political
Don't go there, Dale.
I'm doing it.
It's too early in the morning
Biden,
for us.
Buy crude and fade President Biden's SPR activity. Buy it. Buy the SPR release.
Yeah. So
take the other side of the Biden trade on that.
I mean, you know, politics or no politics. I mean, we're heading into midterms, right? So, you know, I mean, he's going to try to do everything that he can.
What are we going to do when we need some, Blake?
He's jobbing it.
Dig it,
drill,
baby,
drill, baby, drill.
Baby, drill. Right? I mean, we need it. We drill.
They're all capped. All those fracking.
You know, it's interesting. Yesterday, I don't know if you guys saw it on Twitter. I went to the other side of town. My son got to play at the pro stadium. You know, practice. They're overseeding his field, which is the old pro field. So we went to the new stadium where the pros play for soccer or football for you Europeans. Anyway, I rarely drive in like rush hour traffic, but I was in rush hour traffic yesterday. And first of all, A, it's annoying. B, I'm so glad that I don't do it on a daily basis. But C, I'm sitting there looking at just all of these vehicles, just, you know, just every day, just chugging, you know, gas. And it's just, I was thinking about that yesterday, ironically. But hey, let's drill it, right? We got it. Let's drill it. I'm joking about that. But what do you think, Dale?
Yeah.
What do you think?
I think you got to buy WTI.
You think so, huh?
Yeah.
All right. Well, I don't know. So
Biden's bid at $72. So where are we all bidding it? 72.50.
This is a nice pullback to buy. Gregor called the bottom in WTI with a wedge.
Well, we're at the 618, and hell, I mean, you guys,
sure.
if you guys want to, you know, start, you know, getting a little nutty here. I mean, we could be developing a head and shoulder
SPR
pattern.
Break.
We're at the 618 here. I mean, I'm not a big crude trader, but I mean, you know, if I was a betting man, I am. If I was a betting man in crude, I'd probably be long here with tight stops. I mean, that would be my thought, but I don't know.
Yeah. Anyway, I just think that we're gonna have a problem when we need it.
Well, okay, so let's take a look. I just want to look at this really quick because I haven't even looked at it this morning. So Netflix, you know, beat
8.
earnings, but their forecasts were down, and Netflix was it's gapped up here this morning, but that's not really helping anything, is it? It's not.
No.
I mean, but God, look at Netflix.
But
You
I'm
think
with
that-
you, Blake. I think you have to buy a break. I think that there's more upside left in this market.
I think so too. I mean, I think a lot of people have really poo-pooed on Netflix, but you can see we're above
Wow.
previous support. So we've got this little breakout that's happening this morning, and so you got to buy dips in Netflix. I
What
think
a
today.
break.
Yeah, I mean that is
What
a
a
big
break.
move, isn't it?
Wow.
Anyway, yeah.
On
So
a blue
what
chip.
else? What else are you guys thinking here? I mean, the euro I think is in a consolidation. One of our traders in our chat room pointed out yesterday, Matej, he's like, oh, we're in a descending channel, but we're in this
Diamond.
triangle, which was
Is that a diamond? Do you know what a diamond? What diamonds are?
Yeah, for they are a woman's best friend.
Carbon
At least that's what I've been sold.
under intense pressure, right?
Yeah, yeah. But
No
I mean,
pressure,
there are
no
diamond
diamonds.
formations. Yeah.
Yeah. I love diamond formations. I just don't see one here. Is that what you're
Okay.
trying to point out?
Yeah, I'm not sure what they look like. That's why I was asking.
Oh, they look like this. So it'd be like here. Let me it would look something like this. So you have a whoops, I didn't want to do that. You have like a megaphone pattern
there.
turned into a triangle, and then you get a massive break, usually dip back in the direction of the trend. But
okay, thank you.
Yeah, that you see him every once in a while. Who was always Nicola. She used to always point those out. And they're not very common. That's the thing is, but when you see them, you should take note. So anyway, the euro I think is in a consolidation. A lot of people are still very bearish here. I'm not so bearish the euro. I still think that we're going to go higher before we go lower. But I know, Dale, you were saying something earlier about will the euro hit a new low? It might. I mean, I'm not going to trade it on the short side here while it's above this triangle support. But I'm not long either, so I'm not playing on the long side. I just when you have that feeling that maybe the lows in the euro are in, and I feel that a break above parity is more likely. That's kind of where I'm at with the euro right now, but that doesn't mean anything. That doesn't mean that we can't.
Yeah, 112 was important to me in the Dixie, and it's not going to close underneath it today, so I just got out of the way.
The dollar index I still believe is this false breakout, and let's not forget this. And I want to go talk about one last thing before we go. This is a what, 13-year channel, 15-year channel, I don't know, in the dollar index, and that's the upper end of that ascending channel, and we went above it for a couple of days there. And then, if you look at the year long or the last year worth of an ascending channel, we also popped our head above that with, you got a couple throwovers, as you like to call them, Dale. So false breakouts like that, I tend to, very, very much, I shy away from trying to get long while that's intact. Yeah. So, I think that you have to sell rallies in the dollar right now. And one of the other things is when you got yields hitting highs that we got right now, and the dollar index is not following, that's something else that we need to pay attention to. But I want to talk technicals about the yen, because I know you guys were talking about the yen when we first started, but I'm going to pull up a longer term chart, and I want to do a little work with you guys. And let's talk about how important these levels are. Let's go to the dollar yen, and let me just go ahead and delete everything. And we're going to go to a monthly chart. So we're going to, look out, pretty far away. Now, if you take a look at this drop, and this is from 1985, and somebody in our community yesterday was telling me that was like, was that the Nixon? Was that Nixon at that point, Dale?
No, I think he started around 1975 with this chart. That was what I think.
But take a look at that high. Now that's where like the real move started.
That's the Louvre Accord.
Was that the Plaza Accord?
The Plaza where to sell dollars was the Plaza to sell dollars and the Louvre Accord to buy dollars 2 years later, wasn't it?
Is that what it was? Well, that would be here and here, right? Because isn't that 75 or is that 8? No, it was in the 80s.
It is. It's 85 when they said the Plaza
Accord.
Yeah, and then 87 was right here.
Right.
2 years later, the Louvre Accord would be right there. So, but let's talk about like the Plaza Accord and where that started. You know, right around here. We're at the 38% retracement now. Technically, you could take this and say, well, what about this high? Because this is the last. If you take this decade, or roughly about a decade, right? That decade, that's the last higher high, right? We had a higher high, and then we started to roll over. So you can say, well, actually, the trend high is there. But I like to look at this is where the massive move started. So you can do either or. I mean, you're gonna come up with 2 different levels, and I guess you can say, well, if we get to 153 in the coming days at this rate, you'll know why. But I'm measuring right here from where
you can do both. I've got both on my chart because there's enough time in between the 2 highs. You're talking years between the highs and big price levels. So I've got both on my charts.
Yeah. So and there you go. So you got a 38% retracement there, and then if you go right over here and you want to move that, it's going to be a little bit higher, like 152.80. And what's a couple hundred pips amongst friends when you're moving at these rates? I mean, as K-Man said just the other day, he took a week off and he came back and the dollar yen was 500 pips higher. I mean, look, that's the kind of market we're in, and that's why when you're trading the dollar yen, you got to take that into account, right? You don't. You've just got to. So regardless of how you're drawing it, we have some highs there. Obviously, we have a lot of horizontal resistance around these levels too. You can go, to this 98 high right there. You got some other highs that come in around the 160 level. So there's going to be a lot of resistance here.
Also, if you're right about a turn in bonds, Blake, that should also build the case for a pullback.
For a reversal, correct. It would be a reversal lower in the dollar yen. Now, one of the other things I wanted to point out is, let's go over to, here's your, more intraday charts, right? So this is the top end of the wedge, which we're slightly above right now. Then you have the bottom end of the wedge, right? So you can see we're actually breaking above that. And that intervention, which happened to be right here, we're now above the 161% extension of that move, because that came in at 149, 30 or 50, depending on how you're drawing it, where your intervention, actual levels were at. But you can see we're a lot of confluence up here. Then the one thing that we've pointed out here many times, but I just want to make sure that we do talk about it at this moment, is you guys remember the Abe, the three-pronged
the 3 arrows,
rest in peace, Abe. Anyway, that move right there, that was a big deal. We've completed our, equal leg move roughly. I mean, that could take us to 151. So all around here, these levels, give or take a couple hundred pips, the dollar yen is facing some pretty key resistance now.
7 on the DSI,
and it's 7 on the DSI. There you go. There's another, throw another shrimp on the bobby, right?
Just asking for
what was that?
And DSI go negative, asking for a friend.
I've never seen it go negative, but sentiment's extreme. We're just at really critical levels now. Is the dollar yen going to turn around here? I mean, I hope so, because I've already started shorting some, but I know where I'm wrong, and I think that's where you guys all have to, if you do trades like this, you all have to identify those levels, because we have one of our traders in our chat room, Nick. He's like, man, I remember when we were like, wow, it looks toppish at 130 and it looks toppish at 120. And yeah, I mean, we could say the same thing here at 150, and 2 months later we could be trading at 170. So whatever you decide to do and however you are trading it, just make sure you approach it with caution, with good risk management, and adhere to your stops. And if you get stopped out, as Mark Chandler would say, lose a knuckle. Don't lose your entire hand when you're trading. Okay. So anyway, I just want to say that. Now, a couple of things before you have a great interview coming up. You have Mr. Peter Bookvar, which has been a guest in the past. Actually, he was at I believe our last event, our last Traders Summit event. And Peter, if you're here and listening in, we'll miss you this time around. We have another lineup here, a bunch of new faces this time around. And so this is happening this weekend. So make sure you do register. It is free to register. And even if you're not going to be here this weekend, doesn't matter. You want to register so you can get the recordings a couple of days after, as soon as we process them all. Because if you don't, we don't release the recordings for like a month or 2 months or something. So even if you can't be there, register. We our sponsor 8cap is giving away 2 free iPhone 14s to 2 lucky registrants, and our sponsor Trader Funding Program is giving away 2 $250,000 assessment accounts. So that's $2,500 a piece for each one of those. So that goes to 2 lucky winners just for registering. So register and check out our sponsors. Make sure you check out the Trader Funding Program. I was just talking to while this was going, when Dale and K-Man and Ryan and Stelios were talking a little bit earlier, I was just direct messaging with one of our traders that we gave a really huge payout to last week. And he's going to be a guest. He's actually making a move right now, and he's got a baby on the way. So he's not. We're going to do the interview in a couple of weeks. But yeah, I was just chatting with him, and those are people that are actually getting payouts from the Trader Funding Program. So check it out. Dale, I'm going to say have a great interview, and thanks everybody for being here, and thanks for all your interactions today, and good luck trading today.
Thank you, Blake. Thanks, team. Thanks for crystallizing things, and welcome back, Peter Bookvar.
To be here. Thanks for having me again.
Yeah, great to catch up with you, Peter. So, I want to talk about what's top of mind for you this week in different markets. I noticed your interview the other day on CNBC, and they were asking you about whether or not you thought this rally had legs, and you said you think it does, but afterwards that we're going to make much lower lows. But what I'd like to talk about is what's really on your mind as far as what's happened with central banking, the intervention, the fact that there is no cooperation anymore between central banks, is there, Peter? It's every central bank for himself. Because why aren't we helping the Japanese here?
Well, it's typically every central bank for themselves. It's only on a rare occasion is there something done together. But why should there be something done together? I think, and regardless, all these central banks.
Hasn't the dollar been, so-called in all the financial press, the wrecking ball? And I mean, it's not above the Fed to be an interventionist. I mean, they've been doing it for decades in different ways. Why not try and break the momentum of the wrecking ball and turn it into something that maybe takes a break for a few months? And
well, if the Japanese were interested in stemming the weakness in the yen, then all Kuroda has to do is widen yield curve control.
Okay.
I mean, it's as simple as that. If the Brits were serious about strengthening the pound, the Bank of England wouldn't be pussyfooting with 50 basis point rate hikes. They would do 75, just as we are. If the Europeans were serious about strengthening the euro, well, they have their benchmark rate at 75 basis points when inflation's at 10%. So all these central banks are doing it to themselves. So to think that we need to do coordination here, these central banks need to help themselves. they are in their control of strengthening their own currencies. So it's incumbent upon them, if they choose to be a little more active on the monetary side, because
Okay, so
at the end of the day, that's what this is. To me,
so
this
then
is
there's
just an interest
never a
rate
case
differential
for
thing.
intervention. There's never a case for intervention on the previous twos, the Louvre, the Plaza. You know, I'm sure there were different countries that weren't really carrying the, you know, the big wood by using rates.
But then if we intervene, then the ECB, the BOJ, they're getting off easy. You know, that the BOJ is sticking to their zero rate policy.
But we're sending
is
credit
insane.
swaps. We're sending credit swaps to Credit Suisse. The Fed is already trying to backstop what could be a problem. Why not just try and address the problem so they're not the lender of last resort for everybody?
I just don't know what can be done. I mean, if you were in the seat, what would we do? What kind of an agreement would it look like that would get the dollar to weaken? I don't know.
Sell dollars.
Yeah, but you know, that'll have a fleeting impact, just as any intervention does.
If it was coordinated, it may not, especially with its crowded.
We saw coordinated rate cuts in 08 and 09. It has a fleeting impact. You need something more substantial. You need the bank.
Okay.
The yen is not going to rally until Kuroda backs off from yield curve control. You can intervene as much as you want, and you can buy as much yen, but the rally's not going to last until they get off yield curve control. The euro rally's not going to last until we see what the winter looks like in Europe, and the European Central Bank starts hiking rates notably, which I think they're about to. They're about to start raising by 75. The Bank of England's likely going to raise by 75. But look at the currencies of countries that have been aggressive. Look at the Mexican peso. Look at the Brazilian real. Did we need to
they've
intervene
been holding
there?
up better
No,
than the G.
because their
You're
central
right.
banks have been more aggressive. We didn't need to intervene. Look at the Canadian dollar. It's actually hung in pretty well because the Bank of Canada has gotten more aggressive. So all these countries, we know the answer. It's just, let's catch up a little bit to your monetary tightening. It's not any more complicated than that.
Okay, you finally, you know, I'm not going to waste any more time putting out that idea because you finally convinced me that.
I mean, just
there
again,
really
look
is
at
no
the
point.
look at the chart of the Mexican peso. They started hiking in 2021. The Brazilian real, the central bank there started hiking in 2021. Their currencies are not tanking here with everybody else because of they were more aggressive, because they know what inflation looks like and they have experience in dealing with it.
In fact, the peso, if the dollar ever did turn down, would really appreciate. So yeah, here you go. You're talking about this long-term picture, and the peso's not up here.
Trade's great.
Down here.
Who would have thunk? A country run by a socialist. Currency trade's great. Well, that's because
so it's all about rate. It's all about rates. Then.
That's what I think it is.
Okay, so then how can we hold out hope that eventually there'll be money flow into precious metals without a weaker dollar? And they sure look like they want new lows here.
I think in
I'm
gold,
long.
yeah,
I'm
gold
long.
as I am,
Shares.
gold as crappy as it's traded last couple of years.
Yeah.
In the face of this year, a very sharp rise in rates and pretty strong dollar, one of the more epic dollar rallies that we've ever seen, you know, gold is not down that much. So to me, gold is just a coiled spring looking for some reason to rally. Now, of course, the rate move too is not helping. I was hopeful that at least the pound would have gotten some support from Liz Truss. And I'm actually, I think, one of the only few defenders of the policy that she tried to implement. But I think
pound looks like it has bottom.
I think it has. We're long.
We could pull back, right? I mean, but the lows are most likely in. This look climactic to me. How about
it does. Yeah, I agree. I mean, in a couple of weeks, the BOE will probably hike to 75. The ECB is going to hike 75. So these other central banks are beginning to catch up to the Fed. I think once the Fed funds rate gets to 4% plus, which you'll get within the next meeting, and then it'll take above that in December. I wouldn't be surprised if December hike is going to be the last hike in this cycle. So we're coming to the tail end of the Fed hikes. Other central banks that are catching up, and as the months go on, we're getting closer to the end of Kuroda's term, and I think whoever replaces Kuroda, opens up the possibility that they pivot from yield curve control.
Can I ask you if you think that what's happened in the UK, the gilt chart really doesn't look that much different than our treasury chart, does it? Except for maybe that one day where there was more panic, they look almost identical. And do you think that if there's problems with pension funds in the UK, I was always taught they kind of look to the UK for what could happen here. Do you think that we may have the same problem with pension funds here, that because of financial repression went out and had schemes going like they did in the UK, and they're really not whole anymore?
I do not think we have the same issue with pension funds here.
Okay.
But we do have the same issue with bonds
Sovereign
and
debt.
treasuries. Sovereign
Okay.
debt is where the bubble was. Sovereign debt is where the bubble is now unwinding, and we're all in the same bubble boat together that has leaks in it. So
Okay.
what the day that we had that event, or the days leading into that gilt implosion,
Yes.
I said, this is coming to a theater near you in the US. And
Okay.
I think now that the 10 years broken above 4, we're entering some uncharted territory, in the sense that I get people all the time telling me, oh, you got to buy long-term treasuries because US growth is slowing and inflation is topped. And
it's such an attractive yield now.
Yeah, and
right?
I've been saying for a while that you can't just analyze the US Treasury market and look at and think about your expectations for growth and inflation here. I said, you have to pay attention to what's going on in European bonds and Japanese bonds. That's where the bubble really took place with negative interest rates. So
Right,
we're all in this
right.
bed together, and you can see higher rates and a slow economy. And that's why I'm much more comfortable owning the short end of the yield curve. Because I don't think the Fed, after getting above 4, is going to have much left. To me, that's much more attractive. Where the longer end, you have all these big influences.
So the inversion
like I
will
said.
go away? The inversion will go away and we'll start steepening?
Well,
On the
I don't necessarily. If it does, then we got some real big problems, because that means the 10-year is going above 4.5%.
Okay.
And not because growth is slowing, or I should
Because
say,
of supply.
not because inflation's accelerating. No, because of again, this bond unwind that's going on around the world.
Okay. And who is on the other side of QT? Who's buying them?
Well, it's interesting. We had the August tick data that came out last night, and you had massive buying out of the UK, but that can be anybody around the world, because you can just tap into a UK bank. You can be the Chinese, or you can be the Saudi. You can be wherever. You just tap into a UK bank who buys US Treasuries, and it shows up under the UK. So UK and Cayman Islands were the two biggest buyers. So,
Okay.
and interestingly, we did get some buying from notes and bonds from the Chinese and the Japanese, but that's only after many, many months of selling. And the Japanese seem to have let a lot of T-bills mature that they were not reinvested. So the big holders of US Treasuries continue to shrink their pile, but hedge funds through the Caymans continue to be big buyers, and God knows who was buying through the UK banks. But yeah, the
Okay.
Fed is essentially selling through QT, and also banks are owning less treasuries and agency bonds, as they are losing deposits to money market funds.
Right. Right. Okay. Any feeling, just as a citizen of the US, about the drawdown of the SPR to really, dangerous levels? You think it could be a good trade to fade Joe Biden on his energy policy, and every time they do a release, like this recent release because of the Saudis cutting production, that it's a nice counter trend. It's a nice fade. You know, Kramer's not the only guy to fade.
Yeah,
And
I mean,
think it
energy.
gets a bum rap.
I've nicknamed the SPR the Strategic Political Reserve now.
Okay.
I mean,
Right before the election.
Just imagine if we actually have some serious and real supply constraints. Just imagine. And here's a guy who just drained it because he wanted to lower the price and get reelected, even though draining it further disincentivizes supply. And it disincentivizes supply out of OPEC, it disincentivizes supply at home. And why should we drill more when our government is purposely trying to reduce the price? So it is.
You worry
so
about it
dangerous
too.
Political. I mean, this is not just, okay, let's talk about the political games. Like I say, just imagine if we have a legitimate supply problem and you physically couldn't get access to barrels of oil, and we had people in Washington that just decided it's going to get the price. It's scary.
We'll have to do what the Japanese did when they couldn't get oil, right?
And turn on the nukes.
Well, you know, some type of, you know, we'll have to go take some. So I wanted to ask you if there were any other groups you were following. You're still basically an inflationista, right, Peter? Are there anything?
I mean, goods prices are softening now.
Okay.
So the goods price inflation story is pretty much over in terms of the extent of its rate of change. We'll have to see to what extent it moderates. The service acceleration continues, but a lot of that has to do with rents that are slow in capturing reality. But in reality, rent growth, which is still pretty robust, that rate of change is moderating. So if the services component of CPI was more real time, then you know, we'd see further slowing in inflation.
I think I was. Oh, go ahead, Peter.
My thing is that inflation is going to fall, but it's going to settle out well above the 1% to 2% range that we became accustomed to for decades pre-COVID. So we're going to settle into a higher structural inflation story, much less than where we are today, but maybe 3% to 4% instead of 1% to 2%.
I was really wanted to ask you about the commodity markets, and I know you like the metals. Any other groups? Is this commodity bull market over? Anything in uranium that you like, or?
So we've been bullish on uranium for years, and the last couple of years on energy as well, and remain that way. And I want to get bullish on copper, but I'm still trying to balance the demand challenge in a slowing economy with still longer term supply issues that will lead to eventual higher copper prices, but I'm just not sure when.
Yeah, the whites go first. So it'd be platinum, silver, palladium. The whites lead. Anyway, the white metals.
Yeah, I mean, interestingly, silver seems to be trying to dig in.
I'm looking for one more low.
It is beginning to outperform. I don't know. I think we might have seen it. It's beginning to really outperform
right
gold.
Here. Yeah, down here.
To me, it's looking very reverse head and shoulders.
Okay, it could be. You know, I would gladly not want to have to live through this. I'm just saying I'm prepped to buy more should it occur.
Yeah, it could. To me, it's looking reverse head and shoulders. Yeah.
You know, they've actually outperformed. The silver shares have outperformed. Look how much stronger you see the pullback here in silver. I didn't like the action last week, but a couple of the shares, look, there's hardly any give back in Endeavor. This one I own too, Fortuna.
Yeah, I hope that's
bullish to me.
Hope that's a precursor.
Yeah.
Yeah, well, they're coiled springs. They just need a break. Yeah, they should. And I think if we can get through a winter with no further tensions in the war, and that Europeans don't freeze, and that their storage levels are manageable, and maybe that helps the euro. And like I said, the ECB is going to hike by 75 next meeting. The BOE.
So you agree that we really do need a weaker dollar?
Yeah, I mean that's it's. I mean, Can the
Because
dollar
metals
and
have
gold
been, if
rally
you
at the
were
same
in,
time? Yes, but
yeah,
I think right
yeah.
now we need a weaker dollar.
All right. And, you know, because gold in yen terms, it's been a huge winner, right? It's just here in the dollar. If you owned gold and you were in yen, gold appreciated quite a bit
That's
as a
correct.
falling yen, right?
Yes.
So we need a weaker dollar to have a bull market here in the US. So you agree with that. Ever dabble in the grains, Peter? And, you know,
Yeah.
I worry about what's happening in Ukraine, that
I
if
do.
yeah,
Yeah, no, we had owned the fertilizers and
Okay.
for the last couple of years and actually sold them into the spike after the invasion. I was worried about the demand destruction side of the spike in fertilizer prices. But
Okay.
I do think that ag will remain in a bull market, and
Yeah.
I haven't now that
The
we're not
Fed,
in the
they,
in the ferts.
I
Probably
don't know.
rather on the ags instead directly.
Okay, because I don't know anyone that went on a diet during a Fed tightening campaign. They're
Yeah, I mean
still
that's the
eating.
thing. Well, that's the thing with ag is that the demand side is pretty linear, upward move. It's the supply side that's always tough to figure out, and supply side's definitely crimped. So I'd rather be owning the crops, the row crops directly, and fertilizer I think is still dealing with again the demand destruction side. So it's probably just easier to buy corn and wheat, I guess, or soybeans.
I'll ask you to put your Nostradamus hat on. Do you have any feeling on how this war in Ukraine is going to play out? And are you concerned about the buildup in the South China Sea and Taiwan?
I mean, I think with China, and if you want to integrate that country because you think it's part of your own, I don't know how using a military, killing people, gets you that. Because if you want them to be part of your country, you're going to kill your own people. That seems to me a bizarre thing. But I guess just look at Russia and Ukraine. How Putin manages his way out of this box, I don't know.
Okay.
I don't know.
I don't. That's a valid answer.
I think the only thing that we can hope for is further figuring out how Europe can get natural gas from other places. It was a good sign that at least the Germans are keeping open their 3 remaining nukes through the winter, and maybe that will continue on past that, even though it's only about 10 to 12% of their energy needs.
Yeah.
So I think
so. This inflation problem, supply driven, isn't going to be solved by the tool of higher rates and QT.
Well, it's not just supply driven. The government spent $5 trillion in 2 years goosing the demand side.
In the wrong things. Why didn't they give incentives to build more housing? Why didn't they give incentives to build out our infrastructure for natural gas, for pipelines? Give farmers incentives to grow more grain. It can't be solved by a central bank, those issues, Pete.
Well, it's the central bank, and not just the Fed, but central banks around the world, to me, are responsible for
where we are.
The housing price explosion to the upside. So they're directly to blame. And we can blame the supply issues and zoning issues in parts of the country, but the Fed is responsible for creating its second housing bubble within a short period of time. And it's amazing that they were able to do it again. And why was the Fed buying MBS for as long as they did and as much as they did? The housing prices went up 40% in 2 years because of the Fed. So they pushed the demand side. And housing is the biggest part of the CPI. So this is a lot more than just the supply issue.
Okay, because that's what the bulls are saying. And actually, a lot of people are saying the market's holding up pretty well, considering the draconian and very persistent and short period of time that rates have jacked up.
They're saying the stock market's holding up?
No, the housing market.
Oh, the housing market. Well, the one thing that what's not holding up is the pace of transactions. That is falling sharply.
Okay,
Maybe what they're referring to is the price of homes. But
that's
the
right.
price of homes could hold up because you have a lot of people that are in 3% mortgages that don't
Right,
want to
right.
give that up. So they're not going to move and supply is going to remain constrained. So
Right.
the price side could hold up, but the actual transaction activity is collapsing.
Yeah.
Look at the
Okay.
NAHB home builder index yesterday.
Yeah.
It's down to 38. The break even's 50. That's not holding up.
Okay, so prices holding again.
Prices will
So
hold
you're-
up better than the pace of activity, but keep in mind, for every house that's not sold means that there's less paint bought to paint it. There's less
Yeah,
carpet and wood flooring used
Right.
as part of that. So housing all in is is between 15 and 80% of the US economy. So prices can hang in, but if the activity story falls sharply, that has a dramatic GDP impact.
Yeah, this is not going to be like 08 for the reason you just mentioned.
No.
The rates that people couldn't move out and find any, they'd pay twice as much for rent. If they
And in 08, the
sold their
Fed cut
house.
rates down to 0. So it wasn't a mortgage rate thing. It was
Yeah.
people were speculating in homes and flipping homes like there was no tomorrow. It's much different now.
Do you think that someone that doesn't own a home would have an opportunity after this cycle plays out? Or
I mean, I hope so, but you need prices to fall more than they might.
Yeah. Right. And
Um,
that's going to take higher financing costs to do it.
the first time home buyer is the one who gets screwed.
Yeah. Okay.
Unfortunately.
Well, anyway, go Padres.
I'm a Yankee fan, but we'll see in the
I
World
know.
Series.
Anyway, Peter, great catching up with you. And
too.
Thanks for letting me take you through the whole board. Peter is someone I could ask anything to.
Thank you, Dale.
And I really appreciate it, buddy.
Anytime. I appreciate having me on.
All right, Peter
All right,
Bookfar,
take
everyone, follow him at P Bookfar on Twitter. You'll see him on CNBC all the time, and go to his site as well. Some great insights there.
Thanks, Dale.
Okay. All right, buddy. So that's a wrap, everyone. You could join the team in 18 minutes on the Morning Edge. Good luck, and I'll see everyone tomorrow. Adios. Don't just count your pips, count your blessings.